One of the biggest draws of a reverse mortgage is that it eliminates the monthly mortgage payment. For a lot of homeowners, that's the part that gets their attention. No monthly payment, access to equity they've built over decades, and the ability to stay in the home that they've lived in for years. But eliminating the monthly mortgage payment isn't the same thing as eliminating the responsibilities of owning the home. Those responsibilities are still there. They just look a little different, and understanding them before the loan closes is one of the most important things a borrower can do. With a traditional mortgage, most people think of their obligation as the monthly payment. A reverse mortgage changes that structure. Instead of making monthly payments, the loan balance grows over time as interest and fees are added. But even though the monthly payment goes away, the loan still comes with 3 ongoing requirements. The borrower must still live in the home as their principal residence, pay the property charges associated with the home, and keep the home in good condition. Those 3 responsibilities sit at the center of the reverse mortgage program, and as long as they're met, the loan can remain in place. But when they aren't, the loan can fall into default. None of these are unusual obligations. They're the same things that come with owning any home. Property taxes are one of the most important ongoing responsibilities that continues. They're considered one of the property charges attached to the home, and they still have to be paid on time regardless of the reverse mortgage. How they get paid depends on how the loan was structured. The loans made after April 27, 2015, the lender evaluates the borrower's ability to pay future property taxes and insurance as part of the origination process. And in some cases, a portion of the loan proceeds may be set aside specifically to cover those costs going forward. For loans made before that date, borrowers generally need to budget for taxes and insurance on their own each year. Either way, the obligation is the same. The taxes still need to be paid, and staying current on them is essential to keeping the loan in good standing. One thing worth knowing, if you pay your property taxes in installments, it's important to let your servicer know so they don't mistakenly flag a missed payment. It's also worth checking whether your state offers a senior property tax exemption program, because many states have programs that can reduce property tax payments for older homeowners, but they often require an application and may require you to apply shortly after the tax bill is issued. So your local tax collector is the right place to start for information on what's available in your area. Insurance is another responsibility that doesn't go away after the loan closes either. Homeowners insurance must remain active on the property because it protects the home against unexpected events and is required under the terms of the reverse mortgage. In certain locations, flood insurance may also be required. Just like property taxes, insurance payments may be handled directly by the borrower or managed through funds set aside with the loan, depending on how the loan was structured. But the requirement itself doesn't change. The home must remain insured. Depending on where the property is located, there may be additional charges that also fall under the borrower's ongoing responsibilities. These can include homeowners association dues, condominium fees, ground rent, and any special assessments tied to the property. These are all considered property charges under the reverse mortgage program, and they continue just like taxes and insurance do. So one important thing to know, if loan proceeds were set aside to cover property taxes and homeowners insurance, that set aside does not automatically cover those other charges. HOA fees, condo fees, and ground rent remain the borrower's direct responsibility. The third core requirement is keeping the property in good condition. When the loan was originally issued, the lender evaluated whether the home met HUD's property standards, and once the reverse mortgage is inactive, the homeowner is responsible for maintaining that condition going forward. That means addressing normal repairs and upkeep as they come up over time. If the servicer identifies a concern about the property's condition, they may conduct an inspection after providing notice. So if repairs are required, the borrower generally has 60 days from the date of notification to begin addressing them. If cost is a barrier, the Area Agency on Aging may be able to help connect borrowers with assistance programs, and they can be reached at 1-800-677-1116 or at eldercare.acl.gov. If you need to hire a contractor to handle repairs, the CFPB recommends taking a few steps to protect yourself. First of all, get estimates from multiple contractors before committing. Ask people you trust for referrals. Verify the contractor is licensed through your state contracting licensing board. Have a lawyer review the contract before signing. Make sure any written contract matches what was promised verbally, and be cautious of contractors who show up at your door unsolicited. Don't feel pressured to make a decision on the spot. These precautions matter because contractors working on older homes can be a common target for fraud, and taking a little extra time up front protects both the homeowner and the property. One responsibility that catches some borrowers off guard is the annual occupancy certification. Each year, the lender or servicer sends a notice, typically a postcard or a simple form, asking the borrower to confirm that the home is still their principal residence. Signing and returning it promptly is important. If the borrower has a spouse listed as an eligible non-borrowing spouse in the loan documents, the certification will also confirm that the couple is still married and that the spouse still lives in the home as their primary residence. This is routine paperwork, but ignoring it creates unnecessary confusion and can trigger follow-up that could have been avoided by responding in the first place. If the loan requirements go unmet, property taxes or insurance go unpaid, or the home falls into disrepair, the loan can fall into default. Default doesn't automatically mean foreclosure. It means one of the loan requirements hasn't been fulfilled, and the most important step at this point is to contact the lender or servicer as soon as possible. In some cases, there may be options to resolve the situation, including repayment plans, or for borrowers who are at least 80 years old and facing critical circumstances like a long-term disability or terminal illness, something called an at-risk extension, which can be renewed annually with proof of need. So 2 other resources worth knowing about if a default situation arises. HUD-approved housing counseling agencies offer free or low-cost guidance and can help borrowers understand the options available to them. They can be reached at 1-800-569-4287 or through HUD.gov. An attorney can also be valuable in a default situation, particularly if foreclosure proceedings have been initiated. The consistent theme across all of this is that early communication tends to create more options than waiting. For the right homeowner in the right situation, the structure of a reverse mortgage can work well, and most of the responsibilities that come with it are simply the same ones that come with owning any home. The important thing is going in with a clear picture of what those responsibilities look like and a realistic plan for meeting them. So if you want to talk through whether a reverse mortgage fits your specific situation, use the link below and book a call with my team. If you want clear, reliable explanations about mortgage programs and how they apply to real decisions, make sure to hit that subscribe button too. My goal is to give you accurate information so you can make informed decisions with confidence and ultimately win with Wade. We'll see you next time.